Hello everyone, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, May 31st, 2019. We are now in the last trading hour of the day and the last trading hour of the week, and as many of you know, I prefer to make the majority of my trades based upon the closing price of the day because I feel it's the most valid. So that's where I like to get the information that the market's giving me, which is in the last hour, preferably near the very close. And I think that's the best data in order for me to take my entries for new positions or to exit my current positions based upon the price that's closest to the close. So I'll tell you what, I'm glad this is the last day of the trading month. This has been some kind of a month here. And, sometimes you have great months, sometimes you have months that are not so hot. And this is one of those months, but what do you do, right? That's part of trading. If you look at a year from a trader's perspective, you may have 4 months where you make all your money. You may have 4 months where all you do is tread water and win a little, lose a little, win a little, lose a little. And then you may have 4 months that are down. So, it's frustrating. It's frustrating. It's not like you make money every day or every week or every month. But as long as you kind of know that going forward, it makes it a little easier. You can kind of transcend it. But you really do make most of your money probably in 4 months of the year. And the other 4 months are probably just sidewards, and the other 4 months are losses. So, keep that in mind. It's totally normal. All right. So the format for today is, first of all, we're going to go ahead and we're going to run the government required disclaimer. Then we're going to come back. We're going to take a look at my current positions, when I bought them, why I bought them, and how I'm going to manage them going forward. And then we're going to go through my watch list and see if there are any interesting setups for today. And then after the market closes, if you have any questions at all, I'd be happy to answer those for you as well. So, all right, well, with that said, let's go ahead, run the U.S. Legal disclaimer, and I'll be back in about 40 seconds. So hold tight, please.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, so we are having another one of those days, everyone. We had some information, we had some news about the Trump administration levying a 5% tariff on all goods coming in from Mexico. So like this entire month, it's just been one surprise after another. So, I mention this every day, but I'm going to mention it again. You never know what's going to happen. There could be a tweet coming out of left field, so always please position size correctly. Do not take too large of position sizes. Do not have too large of account heat, meaning, don't have too much of your capital at risk in anyone in your combined trades. Me personally, the maximum I will ever take is 60% of my available capital in all my combined positions. So yeah, you never know. I mean, today's a monster day to the downside. I'm happy to say that, haven't done too badly today because we've had some, I have a bit of a diversified holdings at the moment that's holding up really well. So Sometimes when you have a big down day like this, just having a very small loss seems like a huge win. So, okay. So, yeah, the Dow's down 300, the Nasdaq's down 106, and the S&P's down 33. So, this has been a monster. This has been a monster day. So, all right, well, let's go ahead and take a look at my current positions and see where I bought them and what's going on. All right. All right, so here's Apple. I did buy Apple on the 29th of May, and the reason I bought it is we went under the 30 RSI and then back over. That's a signal that I take that shows that sometime during the day the market tested the under 30 level and it rejected it, which is a good sign. So I did buy this here, went up a little yesterday. I did not hit a profit target yesterday. Today, you can see we are down and we're at a 30.31 RSI. So we're pretty close. So if today it closes under the 30 RSI right over here, I will be exiting that. But you can see that would be an exit for a small loss. And that's the key to trading, right? Maintaining small losses, scratch trades, small wins, and large wins. That's what you have to have in order to be a profitable trader. You just have to get rid of those large losses. So again, it's a 30.26 right now. If it closes under 30, I will be getting out. You can see these are my profit targets here, but didn't come close today. So we'll be watching this at the end of the market. Under a 30 RSI reading for Apple. Gold, you can see I had a good day on gold. I did buy this yesterday on the 30th of May. And why did I buy it? Well, for several reasons. We had the 5 EMA cross over the 20 EMA. That's a quantified profitable back tested system, and that is why I bought it. And so whenever the 5 crosses back over the 20 EMA, that is a valid entry signal. In addition to that, we did take out this previous range or this previous fractal. A fractal is when you have a high point with 2 lower highs to the left and 2 lower highs to the right. So that also triggered and closed above the fractal. Thirdly, MACD had just gone positive, and that shows positive upward momentum. And then we did have a lot of volume on that day as well. So, this is a really good example, everyone, of looking for a setup that has multiple indications that it's going to go up. And so the 5 crossing the 20, that was one. We took out the previous range. That was another one. We had MACD go positive. That's when the green line crosses over the red line. And we had an increased amount of volume. So you can see went up nicely. I did hit 1, 2, 3, 4 profit targets. I am out of about 40% of this position now. Each profit target I hit is somewhere between 10, 20%, depending. This was a trend trade, so I'm getting out of fewer as it goes up compared to if I was in a counter trend, I would get out of more shares on the way up. But this is a trend trade. So how am I going to manage this going forward? Well, my plan was when I initially got into this trade was the plan was the 5 crossing over the 20-day moving average. And so unless we have some price action here that's really negative, I will most likely continue to hold this trade as long as the 5-day is over the 20-day. I won't manage it like I do my discretionary trades with the 70 RSI. Those are discretionary trades. This is a mechanical trade, but because I phase out, I do have to have some type of end profit target, and currently it's right here. It will move up higher because you can see this 6 ATR channel now is going up. So as long as it keeps going up, my target's going to get further and further away. So in general, I'm going to have about 10% position sizes until I'm out of the trade, or the 5 crossing back over the 20. So I like to have multiple trading approaches. I like to have discretionary approaches where I use the 70 RSI, where I use trailing stops. I like to have mechanical systems where I just follow them, because sometimes you'll get an entry and a mechanical crossover system entry. But if you were discretionarily trading it, you would not be able to find any entries. Sometimes it just goes up, 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 up. And when we do our discretionary trades, we have to look for certain patterns and certain triggers to get us into the trade. So that is another reason why I like to have a portion of my portfolio in these mechanical trading systems. In addition to that, I also do like to sell puts for income. And then I also use the overnight SPY trade, which we'll get into a little further down here. But the point is, in addition to having multiple individual stocks and not having too much correlation, I don't want to have too much correlation with my trading approaches either. And I feel like using a variety of trading approaches helps smooth out your equity curves, helps smooth out your drawdowns. So again, on gold here, as it continues to move up, I will continue to phase out. Most likely the 5 crossing below the 20 will be my exit signal on this. Unless we have some huge major reversal, huge volume, then I may turn it back into a discretionary trade, but we shall see. But I am really glad, obviously, that I bought gold today. This is a really nice trade. Look at this volume, unbelievable. So that's the plan on gold. Intel. I did buy Intel back here on the 29th of May. I bought it because it went under the 30 RSI and then closed back above 30 RSI. At the same time, it also went from under the third ATR channel back over the third ATR channel. So that was my entry, and MACD went positive. So this is under the 200-day moving average. So anytime I take a trade under the 200-day moving average, I use a half position. So similar to Apple, if this does close under the 30 RSI, I will get out and lock in a small loss. We did hit one profit target yesterday, which I'm grateful for. My initial profit target is the 50 RSI up here, this blue line. This is a counter trend trade. So as it moves up, I will be taking larger and larger amounts off, because in a counter trend trade, more than likely it's going to rally for a few days and then come back down. So that is why I take larger amounts on my profit targets in the counter trend trades. It's holding up relatively well today. It actually has been holding up pretty well. As you can see, it's been moving sideways. So similar to Apple, Apple's at a 30-14 now. So if it closes under that 30, I'm out of there. But you can see Intel is holding up better. So I have a feeling we're going to be able to keep Intel. I don't know about Apple. Lockheed Martin. I did buy Lockheed Martin back here on the 29th of May, and the reason I bought it was it was a nice V1 signal. You can see the price moved up nicely, this made a higher high from here, moved down, moved sideways, attempted to go down. This bar took out the previous low. It also took out this previous low range here, reversed back up here. This is day one, day two, day two closed, went below day one, closed above day one's close, also tested the 20-day moving average, also closed above the 10-day moving average. Yesterday we did hit one profit target, I believe. Yes, we did hit one profit target. My initial profit target to the upside on this is right here at this blue line. This represents the 70 RSI. As you know, a lot of stocks have issues when they get up into the 70 RSI level. So that is my initial profit target there, and I will phase on the way out also. And then how do I manage this trade to the downside? Well, this day here, the V1 day, This is the washout day, washed out the previous day's low. Initially, I will be using a close below the halfway mark of the washout bar, because it should not go down to here if it's going to go up. If it does come down and close below here, I will go ahead and just lock in a small loss. That's the plan. We'll see it on the upside. I'll continue to phase up to the upside. We'll see if it tests the 70. If it can close above the 70, I will keep it and continue to phase out. If it tests it, even intraday, comes back down, I will go ahead and lock it in to the downside. If we get a close below the washout day, I'll get out. If it continues to move up here, at some point, I'm not going to let it come all the way back down to here. If it has another nice day up, then I will tighten up my stop with maybe a close below the previous day's low, or possibly a close below the 5-day. So that's the plan. Lockheed Martin, it's hanging in pretty well. Actually did get a dividend on this today too, which was nice. So we got $2.20 dividend per share, which, that's nice, right? All right, silver. I have been in this trade a while. I bought it back here on the 20th of May when on this particular day, we went under the 30 and closed back over the 30. And at the same time, we also closed back above this third ATR channel. So those were two indications that we had made a short-term bottom. And as you can see, it did immediately start to go our way. I was out of about 60% of the position right here. Then it did go back against us, but I kept it here. And why did I keep it here? Well, it did test the it did test the 30 RSI intraday, and then it closed back above the 30 RSI at the close, and it also closed back above the third ATR channel. So I did keep the 40% less that I had left, and you can see it's been moving up ever since. I did hit 2 profit targets today. See this blue line right here? This was the 50 RSI. That was my initial target. And today we got very close. I mean, we got probably within, excuse me, 3 or 4 ticks of that. So being that we did hit 2 profit targets again today, and we were very close to the 50, I'm going to go ahead and just lock this position in because I don't have much of the position left. So I'm just going to go ahead and lock it in because essentially it did get to the 50 RSI and it has failed from there. And we have that position in gold. Now, if the 5-day crosses back above the 20-day, if that happens in the future, I'll take a fresh entry on silver based upon that, just like we took the 520 based upon gold today. Let's see. All right, here we go. All right, so the SPY position, let me just show you in case we have some new viewers today. I do buy the SPY every day in the afternoon, and I sell it first thing in the morning, and I do that based upon this this study. Since 1993, if you would have bought the SPY on the open and sold on the close each day, you would have actually returned negative 5.2% since 1993. But if you did the opposite and you bought on the close in the afternoon and you sold in the morning on the opening, you would have returned 568%, meaning that more than all performance in the SPY came in after hours trading. So the green line here, this is the buy in the afternoon, sell in the morning. The red line here is the buy in the morning, sell in the afternoon. And you can see over time, this is a very valid, quantifiable, back-tested system. That being said, there are drawdowns, just like in any system, there are drawdowns. You're going to have times where it does not work and it's going to go against you, and you have to keep the long view and keep in mind the long view about, has this back tested positively in the big picture, and this certainly has. So that is the reason why I buy the SPY each day, each afternoon, and sell it each morning. This month has been a difficult proposition with this approach, but again, I'm taking the long view on this, every day for years, and the data shows pretty good results if we do that. The important thing is that you only take a small position size, like I am with a 5% position size every day. So with that being said, I did buy it here yesterday at 278.89, and then I sold it first thing this morning for a loss, 276.30. So you know, it's tough to take that loss, but that's trading, isn't it, folks? So all right, so I will be buying this again today at the close based upon those results. All right, so let's see. Hey, Dr. Jorgensen, how's it going? Bruce says the government itself should have a disclaimer that it doesn't know what it's doing. Yeah, there you go. It should, right? It should. Gold, good trade. Yep. Gold move stop up to... Well, we're out of about 40% of that position already, and it's a mechanical trade, so I'm going to just use the 5 crossing back under the 20 because it's a mechanical trade, not a discretionary trade. Better buy your lady some jewelry to help our metals trade. That's right. Hey, Frederick. How you doing, my friends? Good to see you. Thanks for coming by today. So quickly, before we get to possible new entries, Apple close under 30. We're out. It's getting very close. Gold, mechanical system waiting for the 20 cross back below. Intel close under the 30. Lockheed Martin close back under the halfway of the washout day. Silver, going to go ahead and just lock that whole thing in. That's been a nice trade. And then SPY, we'll buy that again this afternoon. Hey, I do want to show you this. I want to make this a little segment where I do take some sayings from some of the world's most famous traders and go over it a little bit and see if we can flesh out what they mean here. But this is by Bill Lipschitz. He, very famous trader. He was featured in Market Wizards, but he says if most traders would learn to sit on their hands 50% of the time, they would make more money. And it's so true. I think the common theme when you read these books from the trading masters is when they're asked, why do most traders fail? The reoccurring theme is that they trade too much. They want the excitement. There's a fine line. Are you in this to make money, or are you in this to have excitement? And if you're in it for the thrill, then you're in the wrong business. This really is a business. So sitting on your hands, I think, is a good thing. And like he says, if most traders would sit on their hands 50% of the time, they would make more money. I have no doubt that that's true. So sit on your hands, everyone. Don't talk yourself into a trade. Let that trade really jump off the screen, really line up, really tell you things are great, similar to the gold trade that we took. Anyway, yep, if most traders would learn to sit on their hands 50% of the time, they would make more money. These are some of the best traders in the world. So, read that, internalize it, and make it part of your trading strategy of sitting on your hands unless something really, really, really good comes along. Okay. All right. So let's go through, see if there's anything interesting today. All right, so Apple. We already have Apple. We know what we're doing with Apple. Close below 30. We're going to be exiting the position. So we'll mark that. Amazon. Boy, it's getting close to really where I want to buy it. And that is here at the 200-day moving average. It's not low enough on the RSI to go ahead and buy it. So let's be patient. I have a feeling we have maybe another 1 or 2 days down, but that's just a gut feeling, doesn't mean anything. But being that we're getting so close to these long-term moving averages here on the indexes and some of these large monster stops. I would be surprised if we didn't have some kind of bounce here, but let's wait for the bounce to tell us. Let's just not try to anticipate the bounce. So nothing on Amazon. Hey, Mount Doji, how you doing, my friend? Hey, sorry about Golden State messing up your basketball trade yesterday. I saw that. I saw that on your Twitter feed. Sorry, buddy. Boeing. All right, so Boeing obviously is pulled away from the 200-day moving average. I would look for a close under the 30, back over the 30, or some kind of nice V1, V2 close to that range. Alibaba is just continuing its downward spiral every day. It's getting ugly. Caterpillar. Well, Caterpillar's getting down there. It did test the third ATR channel today. At one point, it was under the 30. It went back over the 30. I would consider buying Caterpillar here if it does close above the 30 based upon the bounce off the third ATR channel. So it would be a half a position. So I am going to mark Caterpillar and take a half a position if it closes back above the 30 RSI, but that's yet to be determined. Canopy Growth did have some support at the 200-day and today just gave it up. So nothing on Canopy Growth. Cisco, yeah, not good. I would be looking for a close back under the 100-day moving average and a close back over. That would be an interesting position, but again, let's be patient. Let's wait for that to happen. I don't know if it will happen, but you got to have a plan. You got to say, I'm only going to buy this if it does this or this or that. And right now, buying it here would just be a purely anticipatory trade, and we don't want to do that. We want to use actual indicators and price action. Delta Airlines, boy, look at that. It was hanging around that 200-day and just down today. So it's under 26 RSI, and no interest now for that. Boy, these are getting close to really setting up. I mean, here we have the DDM. This is the double leverage Dow. It is finding support at that third ATR channel. It is still above a 30 RSI. It did not go below 30 and back above 30 yet today. I would really have liked to have seen that happen. Let's go ahead and look at the weekly. Well, did catch support at the 100-week moving average, so it does have some support in 2 time frames, both on the weekly and on the daily here. So I'm going to just mark it, and we'll see what happens at the end of the day. Mount Doji retired from gambling last night. That's a good retirement. As a general rule, that's a really good retirement, man. Really needed that sweep. Yeah. All right. So the Dow Jones Industrial, similar to the DDM, it's getting pretty close down here, but I would like it much better if it would go under 30 and over 30, because the 30 RSI is that key test area. Walt Disney is bucking the trend today. It's a 50 RSI, which is positive. It did go back into the channel, the 1 ATR and the negative 1 ATR, but it still seems a little bit heavy here. It did intraday trigger a V1, but now it's untriggered it, so probably nothing there. Etsy has lost the 100-day moving average. Facebook, oh boy. It was holding support at that 50-day moving average, and then it just gave up the ghost today on a lot of volume. It's a 40 RSI. For me to be interested in Facebook, if I could get a 30 RSI rejection and or close under, close back over the 100-day here, that would be a good entry. But right now it's just kind of in that purgatory area. 5 below has been holding support at the 100-day moving average. It's a 44 RSI. This needs to go lower or higher for me to get interested in this. So really nothing there. Gold, of course, we have. You can see we hit 4 profit targets on that. Boy, what a trade, huh? That was nice. Glad we had that. Dr. Jorgensen says that retirement will be like Brett Favre's retirement, I bet. Uh-oh. I think you would have time better spent, Mount Doji, studying your charts, reading trading books every day, than sports betting, honestly. But you know, Google, did this go under 30 at one point today? Let's take a look. No, it did not. So I would like to see this close under 30 or even intraday under 30 and back over. So nothing on Google. Goldman Sachs is now under 30 RSI. That is definitely not positive. IBB. Now, we have a double bottom here with the divergence, which is somewhat positive. I mean, if you want to look for the silver lining, but again, I would need this to go under 30, over 30 as one of my triggers to get in. In general, the setup looks okay, but you need a trigger to get you in. Intel, we're looking for a close under the 30 to get us out. We have a half position here. I agree, Greg. I'm going to be reading a lot of this weekend. Oh, good, man. Really glad. You know, in my in the description of each one of my videos, I have my recommended reading list with the link. So all those books in there are really great. But I'll tell you, Market Wizards is excellent. Excellent, excellent. If you haven't read that, I would really recommend it. And also, Steve Burns' Moving Averages 101. I've read that book so many times, and so much what I do, you know, and how I trade is based upon that book. So technically based upon Steve Burns' books, Dr. Elder's books, and then psychologically based upon all the things I've read in Market Wizards. So, all right, so Intel looks okay. Doesn't really look like we're in danger of losing this one. IWM, did this close under 30? Let's take a look. No, got close, but we need to see a 29 handle on there, you know, at some point during the day, and we did not get it yet. And it rejected the 30 ATR channel, which is not positive. Coca-Cola is hanging in there, as you would somewhat expect with defensive stock like that, but nothing there. Lockheed Martin, we bought this based upon the V1. We did hit a profit target yesterday, which is nice, and we did get a dividend today. So this one's looking fine. MasterCard is just range bound here, nothing much there. Yeah, Mount Doji, Steve Burns has many books. I think he's written like 10 books. They're really great. I mean, I think they're like $4 or $5 on Amazon. I mean, it's a really good investment. Really, really good investment. He's an amazing person, amazing trader, amazing author, and you know, I'm glad to call him a friend too. He's been a mentor of mine for years. Okay, Merck. Well, I do like what's happening with Merck here, is that we moved up, we moved down. Now I like to see some sidewards movement to know that there's no new supply coming into the market to move it back down. You know, at this point, if we had another day down, like tomorrow, if we went down, reverse back up, did a V1, that would be interesting to me. So this really is kind of setting up. We're in the value zone. We've just come off a nice move. We've come back down, which is normal. Now it's moving sideways. Now I would look for some kind of entry, but nothing today. Microsoft did test the 50 day moving average, the upward moving 50-day moving average. This is a tough one because this would be more of an anticipatory trade where it tested this intraday and then closed back above it. It's somewhat valid to buy that and then just use it close below the 50 as your stop. But I just think you get better confirmation, everyone, if you get a close below on a closing basis and then a close back above on a closing basis. So this is a bit anticipatory when you just have these little bounces here. And in addition to that, we also close below where we open. So I don't really like that one. Netflix, a nice test of the 200-day move back over. That would be interesting, but nothing right now. Nike. Well, we're under the 30 RSI. We're under the third ATR channel. We're under the 200-day moving average. It's brutal. It's just brutal, everyone. It's unbelievably brutal. But, at this point, I really don't know if I want the market to go up or down. I do have a couple positions. I'm very light on stocks, but at this point, I'm kind of hoping we'll go down, test that 30, go back up, and being able to take some more substantial positions here. So Philip Morris, this is one of the hazards of anticipating a trade, right? We did go below the 200, we did close it back above, but we didn't close below the 200 and close back above. We just went intraday and closed back above. And look at this. This is unbelievable. We're at a 2435 RSI. So at the very least on this, I would have to wait for a close back above the 30. PayPal, close under the 50 and close back above would be a good location to the downside. In order for on the upside, none of this really looks good. I mean, if we got up here, I feel like it'd be a little bit almost too high. So close below the 50, close back above the 50 is where I would be interested in this. QLD, I would have bought QLD yesterday if it would have closed above the 200-day, because we closed below, closed back above. Buying a close below and then close back above and holding it until as long as it's above the 200-day is a good proven back tested method. But it did not close back above and we did not buy it, which is fortunate. We're at a 3139 RSI. We're hanging right there on the third ATR channel. So again, as with a lot of these stocks, I really want to see it close under 30, have it tested, have it rejected, close back above the 30. That would be my entry point. This is tempting here. It's certainly tempting with the QLD because you're so close to your 30 RSI, but I can't do anything with that right now because it doesn't fit my plan. The Qs. I'll tell you, this one is challenging because what you have is you have three indications going on here that we may be at the bottom. Now compare that to QLD. We're under the 200-day. All we have is the all we have is the third ATR channel and a 31 RSI. If we compare that to QQQs, we are still above the channel. We do have the support of the 200-day moving average, and we do have a 3185 RSI. And if we look at the weekly, do you see how we're at the 50-week moving average also? There are a lot of indications there, everybody. And I do think that this is worth taking a position based upon all these things lining up. 50-week moving average lining up, 200-day, test of the 200-day, test of the third ATR channel, and very close to the 30 RSI. So I will be taking a position in this as long as it closes above the 200-day moving average. To split the difference here, I will take a 1/2 position instead of a a full position, based that it has not tested the 20-day, I'm sorry, the 30 RSI and rejected it. But there's just too many things lining up for me not to take at least a partial position here. And if I'm wrong, fine, I'm wrong small. And if it does intraday go below 30 and then back above 30, say on Monday, then I would add my second position and make it a full position. So I will be buying a 1/2 position in the Qs. Silver, of course, we know we hit 2 profit targets. I got very close to the 50 RSI, close enough for me to say, all right, I am going to exit the trade. But you can see we got out from here to here with profit, and we got out from here to here with profit. So it's been a nice profitable trade. SPY is now below the 200-day moving average. Unbelievable. I will be buying this at the end of the day, as always. Square. Well, we are making a double bottom. Here's the first bottom. Here's the second bottom. We had a nice rally in between. You can see now that the MACD readings, the red bar is very shallow compared to the first move down. So the setup's there. Doesn't mean the entry's there, but the setup is there. Oh, good. I'm glad, Mount Doji, that it caught your eye. You know, I mean, why I'm glad is that you're starting to see these things. So that's good. Congratulations. So yeah, we have a double bottom divergence, but just because you have a double bottom and divergence, you still need a trigger, right? Big picture, the setup looks good, but you need a trigger into the trade. What would the trigger into the trade be? Well, a V1, V2 entry, a close, going under the 30 RSI and back over intraday. That would be another potential entry, but not anything yet. Not anything yet. Excuse me. AT&T. This was a really nice trade we had here. We rode it all the way up into this area. Then we got out up here. Obviously, was the right place to get out. You know, it's a little tempting because we, you know, currently where we are, we're back to where the support was at the previous low. We've actually, even if we go a little lower, we'll test that low. We'll have a huge divergence, right? I mean, look at the depth of these bars and look how narrow this bar is, or how shallow this bar is. It's a 37 RSI. Boy, what a bar. Remember now, this bar is not this big. It closed there. It is this big. So I'm not going to buy anything on this. This would have to go under 30 and back over 30, but that's a huge skyscraper bar and a huge amount of volume. And I'm just glad we had a nice trade here and got out where we were supposed to. Bonds. You know, I've been talking about bonds, hopefully making a possible top, because that would help stocks, because all this money is rushing into bonds, just rushing. I mean, look at this volume, everyone. This is unbelievable. We're at 81.93 RSI. I think that's the highest RSI reading I've seen this year. It's unbelievable. You know, I'm not going to buy up here, and I would be scared to death to short up here as well. So the higher this goes, really, it means the more people are getting out of stocks and into safe, secure assets like bonds, like gold, which luckily we're in. Tesla started, you know, just moving sidewards there. It's a 22 RSI. Certainly have no interest in Tesla. Boy, look at natural gas today. Oh my gosh. Oh my gosh. Unbelievable. So nothing there. Oil, you know, I did take a position on oil Wednesday when we had this nice rejection of the third ATR channel, and we had a V1. We closed back above the 100-day moving average. I had to get out of it yesterday. It really stung, right? Really stung. Luckily, it was a half position, but it stung. But good thing I got out. Look at this. This is almost a 6% move down here today. You know, if I would have got stubborn here, it would have got doubly as bad. So when you have a losing trade, the next day it just falls off a cliff. Kind of makes you feel better, right? So anyway, I hope none of you have oil today. That being said, I really hope not. This is horrible. I mean, this is unbelievable. Visa, just kind of moving sideways here. Really nothing going on. VIX, of course, is up today. It's up 4%. It basically does the opposite of the S&P. When the prices of S&P puts get higher, the VIX goes higher. So just moving on up, right? These moving averages are starting to fan out. MACD's positive. We're over 50. All the things you want to see if you're long something. So Verizon. Oh, goodness me. So we did buy Verizon back here. Similar to gold, we took out a fractal, we had a moving average crossover, we had a lot of volume. We went from here up to here. We got out in a couple days. That was a really nice trade. Luckily, we did get out. You can see it's just fallen off a cliff. It looked like it was holding the 200 or the 100-day moving average yesterday, but it was just an intraday test. It was not a close below and close back above. Now we're to 31.21 RSI. I wonder if we got under 30 today. 30.53 did not go under 30 and back above. That would be a scary purchase regardless, wouldn't it? Yeah, there is some support at the 200, Bruce, for sure. But the only thing is that if you buy here, it still has not tested it on a closing basis. It tested it intraday. And so if you buy this here now, you are just anticipating that it's going to hold instead of letting it show you on a closing basis that it would hold. I mean, somebody bought this here. I wouldn't fault them. But for me, I wouldn't, just because I want to see something. I want to see it actually tested below and back above. But what's your opinion, Bruce? Are you interested in that? When you get through the rest of these, think about that. Energy Select, boy, just going down to the pit of hell. Financials, lost the 200-day. Really nothing there. Real estate. Okay, you don't want to buy it. All right. Good observation, though. Yep, good observation for sure. I mean, it got to the penny there. So, I wouldn't fault someone for buying this here because you do have the 30 RSI and you do have the 200 underneath you. But what I'm saying is that it's better to see some confirmation that it closes below and back above. Financials, we looked at that. Real estate, nice day today, but I wouldn't buy it. It's range bound. And then healthcare. So, all right, what did that leave us with? Not much, did it? Okay, Apple is now under. So let me write down my notes here. Apple, sell under 30 RSI. So that is definitely potential. Caterpillar would be a half position, closing over the 30 RSI. I do kind of like this, actually. Certainly a half position, but similar to our silver trade where it went under 30, back over 30, stayed in the third ATR channel, and it does look like it's flirting with closing back up in this previous range. So that's a potential. DDM, no. Walt Disney. It did reject the -1 ATR channel. It did gap lower, close back up, V1. It's not bad. It's over a 50 RSI. QLD, no. The Qs, I am going to buy a half position, even though it's over the 200-day. But there's just a lot of things lining up here, and if I feel like it's a good risk for us. If any little close down below, we're out. But we have the third ATR channel, we have the 100-day moving average, we have the 30 RSI on the weekly, we have the 50-week moving average also a support. So I'm gonna split the difference and buy half position on the Qs, and then the SPY. I will be buying that overnight trade, but luckily it's in a good position to be buying that for sure. Similar to the Qs. I want to show you real quick. I was talking about options and selling options for selling premium for additional income. So last week I did sell a put on Apple, which expires today at 170. So essentially, as long as Apple does not close below 170 in the next 10 minutes, I get to keep the full premium, which is nice. And I would not have minded owning it down here. That's why I sold the puts there. And then on the Qs, I also sold some puts on the Qs expiring today, also here at 171. Looks like, hopefully, knock on wood, those will expire and I'll be able to keep the full premium on that. So, again, selling puts, selling options is another part of my trading process to kind of even out my approaches. So I'm grateful for those options coming in today. Apple, looks like it might close above 30. We're going to have to watch that. Gold is fine. Intel is definitely fine. LMT is definitely fine. Silver, I'm going to just go ahead and get rid of silver now. That's been a nice trade. Just clear that off the deck.
Order partially filled.
All right. And
Order
we'll
filled.
do it over here as well.
Order partially filled.
Okay, thank you, Silver,
Wonderful.
for the nice trade. Much appreciated. Look at Apple. Might close back above. We might be able to keep it. Caterpillar does look decent. All right, I'm going to get rid of Disney. Qs, we'll give it a little bit of a time there. SPY, let's see how SPY's looking intraday, seeing if there's any. Look at the volume coming in here. Yeah. See how this bar, the 39-minute bar, is washing out that bar. A lot of volume coming in there. People are getting ready to make their bets at the end of the day. Boy, look at Boeing, everybody. Oy vey. 3M is holding up relatively strong here. It's a 1909 RS, 19.10 RSI. I have some friends that are moving into this slowly, nibbling each day as it goes down. VIX. Dr. Jorgensen says, looks like an update even with the market in the tank. Good work. Yes, actually, if I look at my P&L for the day, slightly down. Very, very slightly down. So I'm very, very happy for that, especially when you have such a huge day down. Seems like a win. Definitely seems like a win. So, it's been a loss It's been a loss on the month. This has been the worst month I've had in 6 months or so. But just to give you some exact numbers, I was down 1.47% for the month. So not too bad considering the S&P. If you look at the S&P for the month, we were down almost 6.43%. So I would say we outperformed pretty well, even though it was a negative month. But that's the benchmark, right? Is the S&P, S&P 500. So you're going to have down months. There's no way around it. The best traders in the world have down months. The best traders in the world have losing quarters. So don't expect that you're going to make money every day, every week. It's just not going to happen. Just get rid of that thought, regardless of what people say or they advertise to you. It just doesn't happen. If it happened, you just own the world, right? It just doesn't happen. It's like somebody saying, "Yeah, I bet on sports. I win every single game." It's not possible. Okay, Apple. Well, Apple's back in the toilet now, under 30. Gold, we're really good. Intel, we are fine. All right, so Caterpillar is right at 30. Interesting how it holds that level, right? I think people are a little scared of this weekend. So I'm going to go ahead. I'm going to buy the 1/2 position in Qs based upon all those indicators lining up. But again, this is only a half position.
Order filled.
Even though it's above the 200-day.
Order partially filled.
All right.
Order filled.
Got our Qs. $174.09. All right. Going to go ahead and get my SPY position here.
Order partially filled. Order filled.
And then SPY over in the other account.
Order partially filled.
All right.
Order filled.
We did get rid of silver. Apple's on the button. Caterpillar is definitely on the button. We got Qs. We got the SPY. So it really comes down to Apple and Caterpillar. Caterpillar's back over. Apple is not. What do we have? We have about 1 minute. This is going to be a tough one. It looks like Apple is not. It's going to be really tough. So we got 30 seconds. Doesn't look like to me that Apple is going to be holding. Does it to you? No.
Order filled. Order partially filled.
All right, so I got out of Apple.
Order filled.
And we'll see if it actually does close under there, if it rallies in the last second. No, it closed under.
Order cancelled.
It closed under,
Order
so that's
canceled.
good. That's good. We made the right decision. So where did we end up? Oh, only 350 on the Dow, 114 on the NASDAQ, and 36 on the SPY. Incredible, everybody. Hey, before we get to questions and answers, I do want to let you know that I do offer private one-on-one teaching and coaching and mentoring sessions in the evening time via Skype. So, if you feel like some one-on-one time with me, teaching and trading and mentoring would help, please let me know. Generally, it starts out with a phone call or a Skype call just to kind of get to know you better, start to understand, how you've been trading, what your trading history is like, what you're having issues with, and then the two of us together, we can come up with a plan and hopefully put you on a good path to becoming a good long-term profitable trader. And I also do record those Skype calls and then send you a link. So you can always go back and look at them. If you're not sure of something. So anyway, if that's of interest, let me know. My hourly rates and my contact information are in the description of this video, or you can always send me a message on on Twitter as well. And then, if you found today's video helpful, if you're learning something, you like the channel, please do me a favor. Really helps out if you could give me a thumbs up. Or subscribe to the channel if you already haven't, or even share it on social media. That would be awesome. So, okay, so that's that. And let's go ahead and see if anyone has any questions about today. What a week, right? Man, what a month. I'm just glad it's over. Mount Doji says, I'll start at the top there. Frederick says, nothing to shorten these days. Yeah, I'm concerned. Like every day where you see something go down, you think I should have shorted. But at these levels, if you take the other side of it, we're looking at these low levels as places to buy, and a lot of people are also. So there's nothing worse than when you lose money on a long trade and then you try to short and then you get doubly beat up by losing money on a short trade. So I have not really seen anything that I would be interested in shorting, other than, I kind of have been watching real estate. But shorting down on the 30 RSIs and those low 30 RSIs, it's a little scary. It's a little scary because, even bear markets have huge reversals, rallies, even though they're bear market. So I would look for something that's a little higher, has a double top divergence kind of situation. Mount Doji says volume on Qs is climbing. Yes, it is. There's a lot of buying and selling going on. Let's see how this closed at the end of the day. Look at the volume in literally the last 1 minute. Look at the volume. These are all the major decisions being made at the end of the day, right? I mean, look at the volume during the rest of the day. Not even close, right? People are waiting to make, these large institutions, large trading floors, hedge funds, institutional investors, you can see they wait till the last minute to make their decisions. And that's why I do the same. So unbelievable. Yeah, it sold off pretty hard in the last minute. Thanks, Bruce. I will have a good hike. I will talk to you later, bud. Mount Doji says, I'm ready to enjoy this weekend now. Hope everyone has a great and safe week and seeing you on Monday. Hey, thanks, Mount Doji. Appreciate it. And, read those books. Try to get Market Wizards. They have it on audiobook and book. But anyway, any of those books would be awesome. I mean, reading any type of trading book will really help you. Frederick says, okay, I see no clear signal. Yeah, I have not seen a clear signal. You can, the only short that I took, what was it, Visa, we took last week, and it was a profitable trade, but they're few and far between to where I really see something I want to short. Mount Doji says I got both books, Market Wizards and Moving Average. Oh, awesome! My bookshelf is going to be looking nice in no time. Oh, that's great. Yeah, let me know, Mount Doji. Let me know how you like them, or if you have any questions. If I can help, just email me. Did you trade BHC by the past? It was a good trade. BHC. Bausch.
Order cancelled.
It's not on my watch list, Frederick. Anything specifically that you were looking at this as a trade? I mean, I can see right here a close under the 200, close back above. That would have led to a nice move. Oh, and here too. Close below, close back above. That would have led to a decent move as well. But it's not on my watch list, so I don't really follow it. So no, I have not traded it. Did you trade it, Frederick? Alrighty. Does anyone else have any other questions or need any clarification on anything, or want me to take a look at any other stocks, get my opinion on them? Okay. I watched Dirty Money Netflix on it. Oh, I see. Dirty Money. Was it good? Was it a good documentary? Okay, boy, what a day. Unbelievable. What a week, what a day. When you have these tough times like this, the takeaway to always remind yourself is something can happen, bad news can happen anytime. And I know it's fun to load up, swing for the fences, and if you're right, boy, there's no better feeling. I completely understand that, but remember, your job as a trader is not necessarily to make money. It's to follow your rules and follow your process. That's really your job as a trader, is the process. The process is the key. Focusing on doing things correctly every day, regardless of what's happening in the market, regardless if you're making money, losing money. The most dangerous places for most traders is when recently they've made a lot of money, or recently they've lost a lot of money. If they've recently made a lot of money, then they feel bulletproof, right? Then they start getting cocky. They feel bulletproof and they start taking too large positions. And that's very, very dangerous. It's a very dangerous area mentally to be in. And then on the other side, another dangerous area is where you've had a bad losing streak, you've lost, because that's when you can become impulsive and go, dang it, it's not going down anymore. Or I can't believe this, things got to turn around. And what do? They load up and they make too big of positions just based on frustration. You've seen the guy in Vegas, right? Playing in Las Vegas. And if he has a really bad run, he just starts getting mad, goes on tilt, just, thinks, well, I'm due. And so he starts betting. Those are the guys that get wiped out. And just like trading, if you're playing blackjack or anything else, you should be increasing the amount of chips that you're betting when you're on a winning streak, not on a losing streak. But everyone does the opposite. When you're winning more, you should bet more. When you're losing, you should bet less. But people's psychology, it's counterintuitive. They want to do the opposite because it becomes frustrating. Yes, very good, corrupt people. Okay. All right. Well, thanks everybody for tuning in. I really do appreciate you spend your time here. I hope this is helping you. I hope you're starting to kind of get an idea of how I look at the market and how I navigate the market, trying to keep your risks small and let your profits run, and identifying support levels, resistance levels. So I really hope it's helping. I mean, that's why I started this channel. I really wanted to help a lot of people with their trading. I've seen people that have, just ruined their lives, and I don't want that to happen to people. So if you have any questions over the weekend, feel free to send me an email. I am going to go through and do a video this weekend on the S&P 100. I'm going to go down through each stock in the S&P 100, see if I can identify something as an addendum list for us for next week. So Frederick says share from 9 to 200 in a few years. Wow, that'd be nice. Okay, well, have a nice weekend. Go out, do something nice for someone today. Give them a smile, a wave, hold the door open for them. Just a little something. Make you feel good, and it'll make them feel good, and maybe they'll pass it along as well. So it's free. Just do something kind for somebody today. All right. Well, hopefully we'll see you on Monday, and we'll see if we can get a better trading week in June. So take care, everybody.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.